Welcome to this training, guys. My name is Valentino West. I'm a mentor, a leader, and a student inside of this space of Trade House. Now, what we're going to be going over today is a MetaTrader 4 navigation setup, how to copy and paste trades, and some basic risk management, some rules to follow to help you with your success when it comes to your trading. All right, so let's go ahead and let's get right into it. So the first page that we're on right now is the quotes page when you open up MetaTrader 4. And what you're going to see on the left side is your currencies. So you're going to see it says AUD USD, Euro USD, GBP USD, and so on. And if you click on these, you're going to see it's going to tell you exactly what it is. So you can see it says Great British Pound versus the US dollar. And let's click on Euro USD. It says Euro versus the US dollar. Now, the important thing to know about this page right here is that when you click on the plus sign, this is how you actually add symbols that aren't there at this moment. So let's say we're looking to add AUD, the Australian dollar, and the Japanese yen. Okay, so what we want to do is don't add the mini, the VAR, or the pro. You want to do the one that's up top that doesn't say anything next to it. Click the green plus sign, hit cancel, go back, and it's going to be right here. All right. So that's how you actually add a currency pair. Now, another important thing is that when you're on this page, you actually go to advanced. All right. And you want it to be on advanced so that we can see spread. And spread is the broker's way of taking a little bit of tax. And with the pairs that you're going to be entering, for the most part, you want the spread to be between 0 to 50. Okay. That's where you want the spread to be for traditional currencies. For currencies like Bitcoin or indices, things that aren't traditional currencies like AUD USD or Euro USD, the spread is going to be a little bit higher. So you don't really have to worry about that. But just make sure for traditional currencies, the spread is between 0 to 50. All right. So the next thing I actually want to go over is the chart. But before we actually go over the chart, we're going to need to actually go to the settings. And then on the settings, go to charts and make sure that it's matching this right here. Make sure it's on candlesticks and make sure you have trade levels turned on. Now, go to colors. And I want you to take a screenshot and then on your own time, match it so that you have the same colors as mine, because the default way that the chart comes isn't really flattering to the eye, in my opinion. So really just copy these colors and then you could go back and change it in the future to have it be something that you customly have decided. All right. So now what we're looking at right now is the charts. And what I want you guys to notice, let me just zoom in, are these little square or rectangle boxes. These are known as candlesticks and they move down or they move up. Okay. The ones that are moving down are called bearish candles, and the ones that are moving up are called bullish candles. And you're going to learn in so much more detail about these candlesticks and about the chart. And it's really not too much to really go over at this exact moment. But that's just a basic introduction to that. What I also want to go over is in the top left corner, these are your time frames. And it says M1, M5, M15, M30, H1, H4, D1, W1, and MN. Now, each of these time frames represent when you're going to be seeing a new candlestick. So for example, if I go to the M1, which means 1 minute, I'm going to see a new candlestick come out every minute. If I go to the D1, I'm going to see a new candlestick come out every day, and so on in between these little intervals. All right. So that's just what the time frames are, and that's what the time frames mean. Another thing that I would like you guys to do is tap and hold down on your chart. And on this dotted line here, when you first come to it, it's going to be all the way over here, squished up. You want to actually go ahead and move that over to the left. And you want to move it to the left so that way you have more room when you're looking at this chart. All right. Now, if we look up top at these three icons up here, the first one is going to be these crosshairs. And what this is it's kind of just your cursor for navigating the chart. And if you look all the way to the right, it's showing you the price that the cursor is currently at. And another place you can actually see the price is right down here. This is the current price of the market right here. This price that keeps changing, this teal line, this is the current price of the market. And if we go to another pair, we're going to see that this is the current price of this market. Okay. And so on for all of these pairs. All right. Next to that is this little F here. And this is where the indicators are. And you're going to learn a lot about these as well as you go through the academy. So we're not going to go into a lot of detail about it right now. But indicators, basically, they just help you make a trading decision. They help you understand if you should buy or sell. And next to that little F are these shapes here, the square, the circle, and the triangle. And these are just objects for you to, place and make little indications on your chart. And it can mean certain things. And you're going to learn a lot more about marking up your chart as well as you go through the academy. So let me just delete this just for clarity as well. And then the last one is going to be, if you click on the trade over here, that's going to take us to another page. But we're going to go into that a little bit later into this video. So this is the chart screen. Now, I want you to look at the history screen as well. So the history screen, this is just showing you your closed trades, the trades that you have already entered into. Okay. So if we had entered into any trades, we would have some history here. But because we haven't, it says no history data. If we go to the week, all we have is the deposit when I actually created this demo account. Okay. And then for the month, same thing. So this is just showing you your trading history. That's all that it really is showing you here. Now, if we go to the trade screen here, there's three things that I want to go over. So the first thing is going to be our balance. So your balance is just however much is in your account at that given time. Your equity is going to be how much would be in your account if you close all the trades that you are entered into right now. Now, because we're not entered into any trades, our equity is the same as our balance. But if we were in a trade and we were in profit, it would reflect the amount of profit that would be in our account if we closed it at that moment. And the last thing is the free margin. The free margin is how much you have available in your account to actually risk. And that's actually very, very important. And we're going to get into that a little bit later when we talk about the risk management aspect of this training. All right. So the next thing I want to go over is some basic terminology. All right. And this is going to be things that you're going to encounter inside of your experience here. So terminology. The first thing I want to talk about is signal or trade idea. And that is just a prediction of what the market is going to do. And I'll show you guys right now. This is an example of a signal right here. Buy BTC USD. And we're going to go into what SL, TP, and TP2. We're going to go into what that means as well in a few minutes. But right here, signal or trade idea simply means a prediction of what the market is going to do. Buy or bullish means that the market is going to go up. Sell or bearish means the market is going to go down. Entry or hit level is the price or the area where we will be buying or selling a trade or that we've already bought or sold. It's going to be where we actually entered in at, the location, the exact price. All right. The next is going to be take profit. And in parentheses, it says TP, just take profit for short, or idea goal. And that's going to be the price or the area the market has been predicted to go to. And it's going to be where the market will take us out with our profits. All right. The next is stop loss or SL or invalidation area. And this is the price or the area where the trade idea will no longer be valid and you will be taken out of the trade with a minimal loss. Okay. And parameters are the prices you will be entering into MetaTrader for that come with the signal. So these are the parameters. SL, TP, TP2. The numbers that are next to that are the parameters. Okay. And the last thing is pips. And pips are the increment that we use to measure the market. The same way how we walk and we call that steps, or we drive and we call that miles, the amount of distance that the market has moved is known as pips. Okay. So the next thing I want to show you guys is how do we actually copy and paste a signal? Okay. So the first thing that we're actually going to do is we are going to go to our quotes page and we're going to want to select the pair that we have just been given the signal for. So let's say we just got our signal for BTC USD. We just got our signal to buy it. Okay. So what we're going to actually do is select BTC USD, select trade, and what we are going to do is put in the numbers that it is saying to put in. So for the SL or stop loss, it says 41615. So let's put in 41615. For the TP, it's saying to put in 43000. So let's put in 43000. And let me fix that, 43000. And it's telling us to buy. And now, since this is a market execution, we are going to be entered into the market right now. So if I click buy, I am now in the market. And remember, because there is a spread, a little bit of tax that the broker takes, it's normal for your trade to be red when you enter it, which means that you are actually losing money at this current moment. And that's perfectly fine. It's perfectly normal. So I'm just going to close this trade because that was just an example of how to actually copy and paste. Now, that's one way that we can actually enter into the market. Okay. But the other way that we're going to actually enter into the market is known as pending orders. So I want you guys to understand that these are other ways that you can enter into the market. So the first way is known as a buy stop. And that is going to be when you are placing a order above the price that the market is currently at, and you're going to get entered in as long as it keeps going up. Okay, so what does that look like? Well, let's say that I want to enter into the market, but I don't want to enter into the market unless it gets right here. Once the market actually gets here, now I'm going to be entered into the market. Okay, that's a buy stop. Now, let's say we have a sell stop. That is when the order is placed below price, and we want the market to keep going down, right? So let's actually move this line. And in this case, I want to enter the market for a sell, but not right here. I want it to enter me in once it gets down here. Okay, that's a sell stop. Now, let's talk about a buy limit. A buy limit is when you are placing an order below the market, and then once it gets to that level, you want it to reverse for a buy. So let's say that I want to buy, but I don't want to buy when the market is right here. I want to wait until it comes down here, and then I want it to enter me for a buy so I can go up, right? That's a buy limit. And the last thing is a sell limit. So a sell limit is going to be when we place that order above the market, but we want the market to reverse and start to go down. So we want to sell, but we don't want to sell it right here where it's at. We want to wait until it gets a little bit higher. We want to wait until it gets a little bit higher, and that's where we actually want to sell this market at. So let me just place a new line because it's not letting me move that one right now. Let's say I want to sell it here. Okay. So I don't want to sell it right here, but I want the market to come up. And then once it gets to this level here, Then I get entered in for the sell and it starts to come down. All right. That is a sell limit. So buy stop, sell stop, buy limit, sell limit. These are just pending orders. These are other ways that you can actually be entered into the market. And if the signal is telling you to do that, this is what's going to be happening instead. Instead of you just entering into the market just like you would normally with market execution, if we click right where it says market execution, you see where it says buy limit, sell limit, buy stop, sell stop. You would select whichever one that the signal is telling you to. And then from that point, what we actually need to do is put in the price now, because we're not entering the market right at the current price. We're waiting. We want to get entered in at a specific price. So we're going to need to put that specific price in ourselves. Now, we're not going to do that at this current moment, but that was just for an example purposes so that you can kind of understand in a little bit more detail what are pending orders. Now, another thing that I really want to go over that's very important, and this is going to be the last part of this training and arguably the most important part for you to understand as a new member coming into this, it's going to be risk management. All right. Understanding risk management. How much am I risking? And it's the one thing that we didn't actually go over just yet. So in this box right here, this is actually your lot size. And what it does is it determines how much of your balance you are going to be risking. Now, as a rule, you never want to be risking more than 10% of your account. Now, you might be asking, how do I find out what 10% of my account is? So let me show you how you actually go about that. So here's what we're going to do. A very easy way to determine how to find 10% of your account. Let's say our account balance is $100. Okay. What you're going to do is take the decimal point and move it over to the left 3 times. So 1, 2, 3. And now the decimal point is here. So what you want to do is now you understand that your maximum lot size is 0.10. And that is actually equal to 10% of your account. Okay. So let's do another example with just a different amount, just so you can see different things and you can fully understand. We'll do 550 just to switch the amounts. Okay. Move it over to the left. 1, 2, 3. And now the maximum that we should be risking is 0.55. And that is equal to 10% of our account. Now, the next thing that is very important for you to understand is, okay, I know that the maximum I should be risking is when I move it over to the left 3 times. That's going to give me 10%, which is the maximum I should be risking. But now you might be asking, how much actually is that? How much am I actually risking? Okay. So I'm going to show you how you can actually see exactly how much money you will make or you are risking in any given trade. So let's say that we have $100, okay? And we already determined that a 0.10 is the maximum that you should be risking. Now, to find how much that is worth per pip, per movement in the market, what you want to do is take the decimal point and move it over to the right 1 time and then add a 0. And you can see right here that is $1 per movement in the market, per pip in the market. So now we actually know exactly how much money we are going to make or lose when we understand how many pips are the current trade that we are actually trading. So if we scroll down here, I want to show you guys this trade here. This is another signal example. So you can see here that the SL, or stop loss, right, or invalidation area, is 25 pips. So if it's 25 pips, guys, okay, if it's 25 pips, let's erase this. If it's 25 pips, and we are risking a 0.10, which is $1 per pip, that is 25 pip. That's $25 that we're risking if we're going to risk that full amount here. Now, understand, you don't have to risk this full amount. You can risk a lot less. That's just the maximum that you should be risking in your account. Okay. Let's say that you want to go as small as possible and you don't even want to risk $25. That's a lot if you were to lose that trade. Okay. Let's say you want to just risk let's change these numbers up here. Let's say you want to risk instead a 0.01. Let's say that's what you want to risk, 0.01. Okay. Now, how do we find how much that's worth? Let's move the decimal point over, and then we add a 0. That's 10 cents per pip. 10 cents. So 10 cents per pip, that's only $2.50. So you can risk anywhere in between that amount. You can choose exactly how much you want to make. And that's the beautiful thing about trading inside of this market. Now, also, let me show you how much that you are looking to make. So let's remember that the TP, the target, is 70 pips. TP, take profit, or idea goal. That's 70 pips. So let's do some quick math on that. 70 pips. And let's say again that we know we have an $100 account. So we're going to risk a 0.10, right? And we already know that when we move the decimal point over and add a 0, that's $1 per pip. That would be $70 that you would make while risking $25. So you'd be looking to make $75 and risking $25, or anywhere in between. You can risk $2.50 and make $7.50, or you can risk anywhere in between. But that is essentially exactly how much that you would be risking. Okay. And if you don't understand all of that at this exact moment, that's perfectly fine. That's perfectly fine. You're going to learn a lot more about this inside of your academy. But this is basically really everything that you need to know to have a basic understanding and get you started. So honestly, thank you for your time. And if you have any questions at all, please reach out to the person that got you onto this video, that got you started inside of this academy. And you have an excellent rest of your day.